financial statements and accounting policies of an entity. Please put your hands together as Mr. Adedoyin comes forward to make his presentation. Thank you. Our dear listeners joining virtually, please, let's just welcome our speaker to the podium to make his presentation. I'm sure you all can hear very well now. Thank you.
Good morning, ladies and gentlemen. It's my pleasure to be with you here today. Before my presentation, I want to share two of my personal experience, which you have to be very, very careful too. Can be very useful to you in your own personal endeavor. In 2006, 2007, we have many wonder banks. Some of them genuine, some are not. And I key into one of them without any details analysis. I just hear about the company. If I mention the name of the company, some of us may know. No Spectos. I think we know it. Abi? Some of us may know it. No Spectos. So without any analysis, without understanding the dynamic of how it works, without making much investigation about the management, about how the company is being run and everything, I key into it. I was working in a bank then, and I invested some amount into it. Every month, I was collecting 200,000 naira every month as return of my investment. And while it lasted, I was really happy, and I was enjoying it. And eventually, I started hearing that the market is about to collapse. I wanted to pull out my money, but unfortunately, I lost the capital. Although the return has given me back my capital, the return has given me back my capital because I got the return for 1 year. So it has given me back my capital, but the real capital I invested in Spectos is lost up to today. I hear some members have gathered themselves together. They are trying to pursue it since that 2007 up till now, but nothing. You know Nigeria's situation. Nothing has come out of it. Not only that, in 2008, I moved from Wonder Bank. I moved aggressively to the stock market. And I started buying different type of stock because I want to make up for the loss that I made. That I made from Spectos. And as at that time, I was head of risk management and control of one of the subsidiaries of a bank. And I used my influence to collect loan from our organization. And I used it to buy stock and shares. 3 months, I started making good money, good money. I buy, I will sell, I will buy, I will sell. And within short time, I bought one car, I bought another car, I bought land here. You know. And before you know it, I was carried away. I didn't do, while I was making money, any company I want to invest in, I will do my own thorough analysis. I will do my own thorough analysis before I can buy the share. But as time goes on, I throw caution to the wind. And I started buying any share that comes. And there's a particular bank. I didn't know they want to do capital reconstruction. I didn't know. I didn't read it. I didn't bother to know. I just told my stockbrokers, buy 1 million unit share of this bank for me. And I bought each one of them, 8 naira. That's 8 million. I took loan of 10 million. Out of the 10 million loan that I took, I used 8 million to buy this particular share. But I wanted to sell the share. They said that within 2 weeks that I bought the share, there was what we call technical embargo on the share. And that technical embargo, because of the reconstruction they want to do, I didn't know, I couldn't sell the share. I tried all I could to sell, even if it's part of the share, I couldn't sell it. And eventually, by the time they finished their capital reconstruction, the capital market itself has crashed. And the stock that I bought for 8 naira, the value crashed to 1 naira. That means that for every unit, every stock, I lost 7 naira. And this is the money that I borrowed. I must pay back. This definitely put me in serious financial pressure. So, why? Why did I find myself in that situation? I didn't bother to look at the financial of the organization. I didn't look at it. I didn't analyze it. I didn't even look at what are they planning to do. Because that type of information will be in the market even before they start to do it. But I didn't bother to gather all those information. And eventually, I just bought it blindly. And I make a very big loss on it. And that is why the topic of today is very, very important. Understanding and interpreting the financial statement and accounting policy of an entity. As company secretary, it's very, very important for us to be able to understand the financial statement and also not only understand it, be able to interpret the financial statement of organization. Not only where you are working, but even other organizations or those similar organizations in your industry. It's important for you to understand and be able to interpret. If you want to invest in any organization, don't just depend on hearsay. People are saying, these people, they are doing this, they are doing that. And you just quickly jump into it. It can backfire, like it did for me. About 2 years ago, too, my children, they came and said, Unfortunately, I have 3 of my children too that are accountants, and only one of them that ventured into engineering. So one of them came and told me and said, Daddy, why are you not doing cryptocurrency and Forex? I told her that I burned my fingers. So they told me that, but Daddy, we are making money on it. You too, you can make money in their home. They are doing it, at a very low level. And they are making money. And eventually, I came into it without really, really understanding the logic. Again, yes. I invested, I said, let me just start with 5 million. I invested 5 million into cryptocurrency. Is it Etron or Bitcoin? Both Bitcoin and Etron. And in my own eye, like this, I saw the thing dropping. And my BP started rising. And my wife called me and said, Wale, why do you have to join these children to do this thing? I said, because I have to go to serious study, both on internet and YouTube, everything, every available material I can lay my hand upon. And I started analyzing, understanding it. And within one single day, I discovered that when you are doing that type of business, 1, you need analytical mind. 2, you have to be patient. 3, you must know how to read the chart. If you don't know how to read the chart and you just go and invest into it, you may lose all your fortune. And when I got the trick, within one day, I started making money. I first of all make about 250,000 in one day. I said, this thing is sweet too. My money is coming back. Gradually, within 1 month, I'll be able to make almost 3 million. And I was able to recover that, my 5 million, and also make some additional gain. What am I trying to say? If you don't understand a particular thing and you go and jump into it, it may backfire. So this morning we are talking about understanding and interpreting the financial statement. We can see that many organizations or entities today made it their policy, either voluntarily or statutorily, to keep proper record of their transactions. And that is why any formal organization, they are either voluntarily on their own, they want to keep good record. Those record. You have to keep the record so that of all your transactions in such a way that eventually it leads to the preparation of final accounts, which are referred to as financial statement. So you have to prepare. You have to take conscious effort right from day one. Many of us will start an organization, we may start a company or a business, but most of the time, we don't take pains to keep record of our transactions. I remember when about 11 years ago when I established a school for my wife. No record. No financial record. There's record for student registration, for this, for that. But financial record, there's no record. The only record she has is just to issue receipt. We don't prepare accounts. We don't know whether we are progressing or we are regressing. We don't know anything. And I don't have the time to actually look into the affair of that because I was so busy that time. I don't have that time at all. But eventually, one day, I make conscious effort. I say I'm going to appoint board of governors. And when I did, I put some of my friends from various fields into it. And we start to have meetings at least twice a year. And in one of our meetings, they asked for the financials. We couldn't produce. But thereafter, we started preparing our financials. And lo and behold, we discover that we have been subsidizing the school for the past 6 years without us knowing. Because we are making substantial losses. And we did not know. Our own is that money is coming in. And that is what normally happens to many organizations. It is through this financial statement that management of reporting entity give report of their stewardship to the owner in particular and stakeholder in general. It's through financial position, financial statement, because many of you that are investors, you hold shares in this company, in company X, in company Y, and these various companies. You are not there to manage it. But the only way the management can give report of their stewardship is through this preparation of financial statement. This financial statement, what is it? What is financial statement itself? A financial statement is described as a formal record of financial activities of a business, person, or other entity. It's accumulation of all these records of what you are doing in your business, of what you are doing in your organization. The money on transportation for this, you buy this fixed asset, you borrow this money from the bank, you pay this interest, and all those type of things. Accumulation of all this in a formal way is what, and the accumulation to the final account is what we call financial statement. And that is why I told us when you are starting any organization, make sure that your financial record, you start your financial record right from day one. Right? Maybe, like my case, for 6 years, we didn't know. Many people, they hold us because we are not collecting the school fees up front. We are collecting it back end. And because of that, many parents, they were holding. And because other money are coming in, we are using the money of few to take care of many people, which is not the proper thing. That is not how to do business. Just like as secretary, don't wait until when your business grows before you start to make your statutory returns. Your statutory returns start to comply with it right from day one. So that if you want, if you want from some of them, your company too can key into it. But when you don't have any statutory returns, you don't have your tax returns, you don't prepare financial accounting, then how do we know how your organization is performing? Then you yourself, how do you know what you are doing? All right. Now, you can say that in some client, financial statements are also called final account. I've said that before. Therefore, all the relevant financial information presented are all brought together, structured in such a manner and in a form that it would be easy to understand. That would be easy to understand. And that is why financial statement, the key aspect of that, the key statements, there are mainly three. And that is financial position, which is balance sheet. Statement of income or income statement, that is the second one. And the final one is statement of cash flow. They are the three key most important financial statements that you have to know. But there are other relevant things, which are the accounting policies. What are the accounting policies? How do we get these figures? How do we generate these figures? What are the assumptions, the underlying assumptions? What are the underlying factors that we took into consideration before we arrive at this particular figure? You have to know all those things too. But most importantly, how does the structure of a financial position look like? That is structure of a balance sheet. In any organization, you should be able to look at it. At a glance, you should be able to say, when you see the quality of items in the financial position of an organization, you should be able to say whether the organization is standing or it may have problem in foreseeable future. We'll see some of these things later. Let me move a bit fast because of my time. Like I told us, the main financial statement, they are statement of financial position, which is balance sheet. Statement of comprehensive income for the period. That is, formally we call it profit and loss. But later we discover you cannot have profit and loss at the same time. So it's called profit or loss. Then we have statement of cash flow. Then statement of change in equity. Then notes to the statement, including significant accounting policies. These are some of the things that are the main item in a financial statement. Besides this, you remember we have what we call the board report, the report of the board, the report of the company secretary, the report of the managing director. When you are reading the report of either the chairman of the board or of that of the managing director, make sure you look at what the organization is talking about future. But don't overlook it. Don't overlook it. Some of those things, they are very, very essential, and they can be a pointer to the direction in which the organization is going in the future. Now, we also have there's other complementary statements, especially as requested in Nigeria, and that is value-added statement, then 5-year financial summary. If your organization is up to 5 years, you have to prepare 5 years financial summary. What are the features or quality of a good financial statement? First, it has to be relevant. Is it relevant? Those things, those items taken into the financial statement, are they relevant to the organization? Are they relevant to that financial statement? Also, comparability. You have to be able to compare one year to another, one period to another. Not only that, you should be able to compare your financial statement with that of similar organization within the same industry. If you cannot compare it favorably, reasonably, then that means that your financial statement is not, so it does not have good quality. Also, not only that, it must be prepared timely. Timeliness is very, very important. In those days, I remember in the 90s, before in Nigeria, I work in an organization. Our financial statement, we prepare it manually. We use ledger. We use different prepare our financial statement. And when our financial year end used to be December 31st. And believe you me, our financial statement for December 31st will not come out until something like September the following year. Yes, before I joined the organization. And when I joined the organization, I met it like that. And I was recruited very, very low, below par to that organization. That was the first place that I worked in my life. Because I was desperate to get a job, I just took the job. And I was given a senior clerk rather than to be an officer. I didn't mind. But I started looking at what they are doing. How can you say the financial year end, 31st December, and now you spend 9 months before your figures come out? What is the problem? I started looking at the problem. And within short time, I started moving from one table to another. If you see our finance department, then it's bigger, it's almost bigger than this hall, and it's full of staff. Finance department alone in that organization. So I started moving from one table to another. What are you doing on your table? What are you doing? No, I just got, being a junior staff, I said, Ogami, I want to know what you are doing so that if I can see if I can help you at my free time. I was going from one table to another. And before you know it, I know what most of them are doing. Fortunately for me, I got qualified as a chartered accountant. I was promoted. And when I was promoted, they now made me to supervise the preparation of the account. And for the first time in the history of that company, I brought out the account within 2 months. Within 2 months, I brought out my Oga and the finance director said it's not possible, that there must be substantial error. That is not possible. So they rejected it. They said we should go and do it again. We did it again. We got the same figure. That's the 3rd month. They look at it. My finance director and some of the top managers, they took the financial statement home and they look at it. After about 2 weeks, they came back and said that we did the right thing. And because of that, I was given accelerated promotion. I was promoted six levels above my level. Yes, and that is why when you are in an organization, don't say, well, it doesn't concern me. You just fold your hand, it's only your desk, and you don't know what is going on in another desk. No, that's not how to grow up the ladder of organization. All right. So the financial statement must be comparable. Also, it must be timely. Not only that, it must have faithful representation. What you put there, it must be faithful. You don't need to manipulate the record. Let there be faithfulness so that the auditor can say this financial position shows the true and fair position. So, presentation. Don't mislead the owner of the organization. When you are making loss, like the case that was shared with us this morning about Cabri, they were making loss, but eventually they keep on covering it up. What they were doing, to me as accountant, I understand what they are trying to do. And when you are under pressure, it's something you can do, but it's not good. That is not what we call faithful representation. So for a quality, for a good financial statement, you must have faithful representation. Not only that, you must be able to verify it. Verify. What that means that if somebody else take the same figures, the same transactions, and come around and also prepare the financial statement, you must get the same thing. If it's not exactly the same thing, it must almost be the same thing. The figure in the financial statement must be verifiable. If it's not verifiable, that is not a good financial statement. Not only that, people must be able to take it and understand it. You must be able to understand. At least even somebody who's not an accountant, maybe a chartered accountant, must be able to understand when they see a financial statement. You should not make it complex or complicated. Make it to be complicated. No. Make it, present it in such a way that people will understand it. Also, you must not spend the whole fortune of the organization to prepare a financial statement. It must be cost effective to generate and to prepare. It must be very, very cost effective. Now, what are the major components of financial statement? No, I just try to simplify it here. One are the assets. The asset. There we have non-current asset and current asset. We have liabilities. Also, in some organizations, they have non-current liabilities and current liabilities. We have equity, which is the shareholders' investment in the organization. That is the equity. Their investment, and also maybe as time goes on, they make some income that they did not share as dividend, which we call retained earning. Is also part of the equity. And at times, maybe they share it at premium. It's also part of the equity. Income in the income statement too. No, we have that one. It's also one of the major components of that particular statement. Not only that, we have expenses, what you spend. Maybe administrative, maybe in the factory, if it's the factory, maybe in maybe interest, and all those different type of expenses, salaries, staff costs, which we call staff costs. You see all of them under this expense, advertising, and many other things. Then you have what we call cash and cash equivalent. This one is the main target of statement of cash flow. Statement of cash flow, you will see financing activities, operating activities, and so on and so forth there. So each of these, they are the major components. But as time goes on, we break it down a bit so that we can understand it better. What is asset? Asset is simply what you hold, what you own to generate income for you. What you own to generate income for you. Most of us, once we have little money, we quickly go and buy motor. I remember myself too. Within 1 year of starting work, I bought a car. And why did I buy that car then? I feel that I need to buy a car. I've become a chartered accountant, a chartered secretary. So I can't be jumping bus up and down. I have to buy a car. But that car, did it generate anything for me? No. Rather, I keep on spending money on it. I have to buy fuel, I have to service it, I have to maintain it from time to time. And rather than to give me money, it's taking money out of me. So to me, that car, it has become loss-free. And because loss-free, it's a wasting asset to me. But eventually, I have to realize, because I bought the first car, within a short time, I decided to buy a second car. And within a short time, I was given official vehicle, making 3 cars, and within a short time. And eventually, I have to pack 2 of them at home. My wife doesn't know how to drive then. I have to teach her eventually for her to be able to drive one. But one is perpetually packed at home. And eventually, do you know what happened to that car? It degenerates. I can't sell it. I have to dash it out to somebody. That is a wasting asset. But what you have, what you own, that generates income for you, that is what we call assets. And asset is a present economic resource controlled by entity as a result of past events. Asset can be broadly divided into non-current assets, as I told us, and current assets. And non-current assets, they include property, plant, and equipment, which we normally call PPE. Then current assets include inventories, which we are so used to call it stock, but they are inventories. Receivables, some of the people that are owners, the debtors. The prepayments, maybe some of our insurance that overlap beyond the particular financial year, our rent that overlap beyond the particular financial year. The lease that we have, the rent that we have, and even the lease, maybe vehicle, you lease a vehicle that overlap beyond a particular year. Cash and cash equivalent also is part of current assets. What about liability? Liability is what you hold in order to, or in the process of generating income. It's what you owe. You hold people. That is your creditors. You go and buy something from somebody. You didn't pay immediately. But why? Because you want to buy that thing and resell. You may pay part of the money. Maybe you pay 75% of the money, you are owing 25%. That is liability. Liability may be described as a present obligation of an entity arising from past event. The past event of which is expected to result in an outflow is liability, is what you have incurred based on past events. It's not on present event, but past event because of past transactions in which you are involved yourself in. Liability may be non-current liability or current liability. We have non-current liabilities. These are amounts falling due more than 1 year. Any amount that is falling due more than 1 year, that is not current liability. And within this one, we may have long-term loan. We may have debentures. What about current liabilities? Current liabilities, this one, they are amount falling due within 1 year. They are short-term in nature. And the obligation for payment is usually falling due within 1 year. Example of these are trade payables, and accruals. At times, we may also have bank overdraft and many other items like that under current liabilities. Equity. Equity is simply your capital. It's your capital. What you are using, what you invest in the organization, and the additions to it. So it is the residual interest in an entity after the value of all liability have been deducted from the value of all its assets. In accounting equation, equity is equal to asset minus liability. If you want to get your equity in a simple organization, they'll say your equity, you want to determine it. All your assets minus all your liabilities, it will give you your equity. Equity may also be called shareholders' funds, which include share capital, retained earnings or retained profit, and other reserves. Income. Income is what you earn or generated to give you profit. What you earn or what you generate that will give you profit. If you buy something at X price and you say S plus 1 price, that is income. So that at the end of the day, when you remove your expenses from it, the organization can have profit. So it is therefore referred to as the increase in economic benefit during the accounting period in the form of inflow or enhancement of increase of liability. So we can see in the accounting equation, profit is equal to income minus expenses. Income minus expenses. And you can see that income comprises revenue and gain. In some organizations, revenue is what is like your sales. But in addition to revenue, you may also have what we call gains. Maybe you dispose certain things, certain items, certain assets. You bought it as X price. You have used it for so years. But at the time you are disposing it, you dispose it at more than the net value of that asset. Net book value, you dispose it at more than the net book value. And that one will give you some gain. So that is also part of income. Expenses. Expenses are what you spend in the ordinary course of business in order to generate income. The expense must be relevant. It must be only. It must be necessarily incurred for the organization. It must not just be something that is not relevant. Like my wife, I have to correct her several times. Anytime she make money, she will take out of that's from the school business. My wife is not an accountant anyway, so she's just an educationist and also a shrewd businesswoman. So when we make money from the school, when she make money from the school, she will use part of the money to take care of the household expenses. And she will now go and record it under the school account that is part of, I told her, I said, no, it's not necessarily incurred by the school. This one is for the home. And it should be either come out from either your own salary or my own salary. So, no, don't mix the home activities with the school activities. And that is what is affecting many businessmen and women today. Most of the time, they mix the whole things together. So you can see that expense are decreased in economic benefit during accounting period in the form of outflow because the money will go out from you. And we have something like repairs and maintenance, salary, advertising, depreciation, and so on and so forth. Cash and cash is the major item in the cash flow, statement of cash flow. And normally, you will also see it as one item in the non-current asset. It's very, very vital. The two of them, the two figures, the final figure in the statement of cash flow and the figure in the non-current asset represented as cash and cash equivalent, they must be the same. So cash and cash equivalent is the total cash net flow available to the entity in a particular reporting period. And what we normally consider under this, they include cash in hand, cash at bank, marketable securities, commercial papers, treasury bills, all with maturity date of 90 days or less. If it's more than 90 days, we may not consider it as part of cash and cash equivalent. It must be something that can be converted, that you can convert to cash within the shortest possible time. The basic accounting equation, we have talked about that one before. I don't think we need to emphasize it here again. Different entities. We have different organizations and different entities. And because we have different organizations and different entities, there is a peculiarity in which they prepare their financial statements. Like now, we have insurance companies, we have banks. The way banks prepare their own financial statement is different from that of insurance. There are some peculiarities. The way insurance prepare their own is a bit different from that of manufacturing company, like Nigeria Brewery. The way Nigeria Brewery prepare their home, there are some items that you cannot see in ICSAN PLC. And also, if you take that of ICSAN PLC, you compare it to that of the airline company, you will see some little difference. So there we have different type of organization. So we even have NGOs too, that they also prepare their financial report. And that one definitely we have to change. It has little variation, but there are some basic things. Asset is asset. But asset in one place may be a liability in another place. Like Many organizations, the cash and everything that is available, is part of non-current asset. But to bank, that deposit, cash deposit and all those type of things, it's a liability to them. All right? Now, accounting standard. Accounting standard, there are a set of rules. These are some of the things that are necessary to prepare financial statement. There are a set of rules, procedures, and regulations guiding the preparation, presentations, and disclosure of financial statements of reporting entities to ensure completeness, to ensure consistencies, and to ensure standardization. No, because without accounting standard, many organizations will just be doing whatever they like. They just present their financial statement anyhow. And it will not, if they are doing that, it will not be able to meet the requirement of quality of good financial statement. It will not be able to meet it. And that is why we have the accounting standard. So accounting standard, they are authoritative statement of how particular items or transactions and events are captured and reflected in the financial statement. So in Nigeria, these standards are formally called Statement of Accounting Standard, SAS. But later, because of the advent, and it's normally issued by Nigeria Accounting Standard Board. Now, the Nigeria Accounting Standard Board has metamorphosed into Financial Reporting Council of Nigeria. And we know that Nigeria too, we are now using Statement of Accounting Standard again. We are now using International Financial Reporting Standard. And that is the in thing now. And that is what is helping us. You can compare. And that is why, because of globalization, like Zenith Bank, they have branch here in Nigeria. They have some of their branches too in other countries of the world. So they can prepare their financial statement and they can compare it easily. The only difference there may be the exchange difference. It may be gain or loss. But every other items. Now, what is the requirement by the company law? We now have CAMA 2020. Abi? But that CAMA 2020, has it been gazetted now? It has not been gazetted. Although we were assured that this November, they are expecting it to be gazetted. And because of that, that's why I'm not really referring to it, but just to let us know. So I still refer to CAMA 2004. Under the CAMA, there are some things that are requirements that the companies and organizations too must meet. And that's according to that section 331. Company must keep accounting records and the type of record to be kept and in what format. It stated it clearly there. And also, under same command, we see that it places duty on director to prepare annual financial statement each year, and the minimum requirement to be included in the financial statement, they include the following. Number one, statement of financial position, that is balance sheet. 2, statement of comprehensive income, that is profit or loss account. 3, a statement of accounting policies. 4, note to the account. 5, the auditor's report. 6, the director's report. Next one, a value-added statement for the year. Also, a 5-year financial summary. 5-year financial summary. And if the company is a holding company, the company must prepare group financial statement. And that is why when you see many of these organizations, you will see the financial statement, especially the financial position. It will state the group, then company for maybe 2009, group, company for 2018. So that 2019 and 2018, you can compare it either for both for the group and also for the company. So that is it is required by the law, no? And that we must know that the financial statement must comply with accounting standard. It is inserted in comma like that. So any accounting standard that is recognized, like now, is International Financial Reporting Standard. It must, the preparation of that financial statement must comply with that accounting standard. Apart from what we have seen, that is Financial Reporting Council of Nigeria, there are other regulatory bodies that require how your financial statements must be prepared. That is SEC, Security and Exchange Commission. For all the listing companies, there are some minimal requirements they have to prepare. The minimal requirement that must be disclosed in the financial report. Not only that, we have Central Bank of Nigeria, especially for banks and other financial institutions. We now have another BOFIT now, BOFIT 2020, which has just been signed by the president. That is Banking and Other Financial Institution Act of 2020. It has just been signed by the president recently. I think, is it this week or last week? Sometimes last week. So CBN 2, they specify which minimum requirement in the financial report of organization, of banks. The same thing, National Insurance Commission too. They have their own minimum requirement too, apart from all their ethics. But thank God for Financial Reporting Council of Nigeria that has brought out a general code for organization. But many of these industries, they have their industry particular ethics too that they must still follow, and they must align it with the national code. All right, we have NICON, then we have also Nigeria Stock Exchange, we have PENCON, and so on and so on. All right, now accounting policy. What are the accounting policy? Accounting policy, there are specific principles and procedures implemented by company's management team that are used to prepare its financial statement. There are principles, there are procedures. And these accounting policies, they are set up by the management, by the board. And the management has to implement it. There are specific principles and procedures, and they have to be implemented by the management team and use it to prepare financial statements. So we can say also, is any accounting methods, measurement and procedures that are used for presenting disclosures. That's accounting policy. And it's it's one of the most important items of financial statement. If you want to really understand how a financial statement is prepared, I was going through some financial statement in the preparation of this slide. I downloaded the financial statement of Zenith Bank. I downloaded that of Nigeria Breweries, PSC. I also downloaded that of ICSAN. And I saw one of them. It's over 200 pages. 200 pages. And I said, because of this disclosure requirement, many people may not even look at a financial statement again. It's becoming more expanded. But if you can take pains to go through some of these things, you will learn a lot of things there. There's a lot of things to learn there. And you will be able to, in fact, when you read it, you will look as if you are also, in fact, you can see what is going on within the organization without you being there physically. But before, financial report, the total number may not be more than maybe 20 pages. Yes, but now, because of the International Financial Reporting Standards and other requirements for disclosure, the least among the three that are the least among the three. But if you are able to go through it, you will learn a lot and you can take an informed decision concerning the organization. All right? I think we have talked about this. Now, what are the importance of accounting policy? Number one, it provides evidence that accounting transactions are evaluated. They are evaluated in systematic manner. They are evaluated in consistent manner. Not that you choose this method this time. When now you see that one is not favorable to you, you choose another system. No. If you do that, you have to state it in the financial and in the accounting policy. You have to state it. Why? Change in accounting policy. And what informed your decision to change that accounting policy? You cannot just look at it that you use one evaluation method to make profit at a particular period or to make some gain. So you use it to your advantage at a particular period. Then you now decide at another period, you just want to change because you look at it that it's not favorable to you again. No, if you have to do that, you have to state clearly, change in accounting policies. Two, it also enhances easy comparison of financial statement with other similar entities. Similar entities, not necessarily your company. Number one, it enhances easy comparison from one period to another. Maybe 2018 and 2019, you are comparing it together. Not only that, similar entities within the same industry. You can also take the financial, like now, I can download, like I have downloaded the financial statement of Zenith. I have that of Access Bank too. I have that maybe with that of GTB. GTB City is better in this area. This one is better in this. This one is better. And maybe I want to the stock I'm going to buy so that at the end of the day, not only that, it also ensures consistency in preparation of financial statement from one period to another. So, and it also make or help in the standard for decision making. You want to make decision making. So we have major accounting policies. What are the major accounting policies? There are many accounting policies. In fact, nowadays, it's very, very wide. First accounting policy, as applicable to different reporting entities, depending on whether the reporting entity is significant public interest entity and publicly listed entity or unquoted private companies with significant public interest or small and medium-sized entities. So there are different ones, and the disclosure requirement of all of them is different. But the one that is very, very intense and elaborate is that of public entities, is that of reporting entity, is that of organization with significant public interest and publicly listed entity. That one is required that they must have intensive and extensive disclosure so that there's nothing that should be hidden. Because if you hear about the case of, in Nigeria, that's Cabri, at certain point too, Liver Brothers too, also have some similar organization like Enron. Because of this, Enron eventually brought out and one of them, Enron brought them down. Today, the disclosure requirement is very, very elaborate, especially for all these significant public interest entity. Now, the major accounting policies, number one is that basis of preparation of financial statements. How do we prepare? What are the basis? That's IFRS. Then, not only that, you have to look at how do you get what type of estimate of also you use to determine your liabilities. How do you recognize it? How do you state it in your financial statement? Not only that, your investment. How do you report your investment? How do you recognize it in the financial position? Your cash and cash equivalent too. What do you recognize as cash and cash equivalent? When do you recognize that this thing is relevant to this particular item? Your cash flow statement, what do you take into consideration? What format do you adopt? What format, what method do you use for your statement of cash flow? Also, you have to also look at your employees' benefit. What basis do you use for it? What measurement do you use in calculating your employee benefit? And also your revenue recognition. When do you recognize revenue? Is it when items are gotten to the hand of customer or before you even make your sales? What do you regard as revenue? Because many organizations in the past, just for them to make some profit, they go and take some items from unreconcilable GL. Unreconcilable GL. They will go and take some figures there and take it to their revenue. Banks used to do it too. Yes, because I witnessed it. I witnessed it. There are some items you can't reconcile them. Even when external auditors come, they can't reconcile them. But I think with technology now, some of those things have been made simple. So from there, each figure, and recognize it as part of their income. And that's just to boost their profit at the end of the financial year. There was a particular small company in VI I handled then, and I saw it, and I have to call the MD. Say, MD, what is happening here? You say you make this profit, but what about, you say you generate this income. This particular and the MD called that this board, if he did not declare anything for them, that he may lose his job. That is not fair representation. That is not fair representation. My time has gone because I still have so much to discuss. When we are talking about financial statement, it's a very vast something, but we are going to get to the very end very soon. So definitely, so your revenue recognition, how do you recognize your revenue? But with the current disclosure now, some of those things, they are thinning out. They are thinning out now. So you can't just manipulate financial record anyhow. If you hide in one place, the leg will refill in another place. There is no way you can tidy up. And that is why, we have what we call forensic accounting. With forensic accounting, easily. Like me, anytime I handle any financial statement, any financial report of any organization, I know what to look for. The moment I look at this, look at this, look at this, look at this, I say. Unfortunately, some of our institute, I'm not talking about ICSAN, no, but some of the institute, I have some of their financial reports. Some of them need to perfect it anyway, because there are some cannot even defend it. I went to attend the annual general meeting of one of the institutes, and in fact, somebody had to come and stop me to start to ask questions, because the treasurer cannot, the treasurer and the auditor, external auditor, cannot defend some of the questions I was asking them. You say, so okay. Interpretation of financial statement. Yes, we are getting to the very last, although I have very short time. After you understand the financial statement, you must know how to interpret it. You must know how to interpret. For you to, especially if you are an investor in the organization, or even if you are suppliers, if you are a supplier. Because if you are a supplier, you did not analyze you did not interpret the financial statement of the organization you are supplying items to. You may run into a problem. The thing once affected me. I won't mention the hotel. There's one big hotel in this Lagos. They asked me, one of my friends helped me to collect the contract. They asked me that for 3 months, I'll be supplying them pepper, tomato, and all those type of things. Do you understand? So, and I took one local woman from my area. I told her, I said, this is your business. I want to expand your business. We are going to do a business together. You have to, we are going to go to my 12, Abby, my 12 together, go and buy some things. I too, I will dress like a local man. So, and we did. We bought some items from my 12. Very large. The thing full of a pickup motor. I went, I delivered the first one, first week. They asked me to also deliver 2 weeks later. I deliver another one 2 weeks later. The third time, they asked me, I deliver another one, making 3 batches. Where's my money? I didn't know their payment policy. Their payment policy say 90 days. I didn't know. I just jumped to it that, this is profit. And no, after the third one, I told them that I'm not interested again. So, but if I have gone through their financial statement, I would have known how long did they pay their suppliers. How long did they pay their suppliers? Then how are they too collecting their money from their debtors? Many people, they don't bother to do this. But if you just go and conduct transaction with any organization without careful analysis, it may backfire. All right? Because of our time, so we have now to analyze, to interpret financial statements. You can interpret it on the surface on its own. What is the total amount of my asset, of the asset of this organization? You can look at that. What is the total amount of non-current assets? What are the composition of the non-current assets? What are the qualities? Are they showing it up? When you start to see goodwill, the figure of goodwill is so big than all the items in non-current item, you should be very wary of that organization. Be very wary of that organization. And now, you go and check current assets. What are the qualities? Maybe it's only inventories that dominated the current asset, or maybe receivables that dominated. They have very large figures. That type of organizations, there may be problem there. What is the total of the asset of that organization? The total asset. See material. Now, you can when you now look at retained earnings, have they been retaining their earnings, or they have been recording losses? We have retained losses. So recording losses, and we didn't know. The building, we built it ourselves, but we have to take into consideration the maintenance, the cost, the depreciation too. We didn't take that one into consideration. And by the time we did all those things, in fact, it was substantial loss. So on the surface of it, you can actually look at financial statement and be able to analyze it. But that one will not give you in-depth analysis until when you start to go to various financial ratios. Financial ratios. So financial ratios, we have so many of them. Just like this little chart that I did, we have so many of them. To measure profitability, to measure dividend yield. What is my earning shares. That's investor term, the long-term ratios. That's the long-term liability. And maybe long-term are highly gear. Some are highly gear. Some are lowly gear. Are they making use of capital? You know, at times, it's more cheaper to have either bond or other things than to go and issue the shares. It's more cheaper. And that's what most of these banks are doing now. How many banks are actually doing public offer again now? Or right issues? There are not many like before. What some of them are doing now, they are either issue bonds, different type of bonds, or even go into debentures. That is what some of them are doing. Because though some of them, they have fixed interest, which once they meet that one, the other money go to the shareholders. All right? So we have different ratios. So, like I told us, the profitability ratio, return on capital employed. We have gross, which include inventory, payable period. We also have what we call short liquidity, that is foreign ratios. We have long-term sovereign interest. What is the interest are we paying on our debenture? Is it the interest taking away all our profits? So you have to know that. The investors ratios too. Ratio, dividend yield, dividend cover. And maybe when you have the slide, you can look at it on your laptop. This financial position is of Nigeria Brewery. You know, I told you Zenith Bank, and which one? You so please, this the Nigeria Brewery. This is the financial position. From this other side, you got asset there. All right. So the equity section. This is the equity. We have non-current equity. I brought it out. Then this is their income statement. You know, all these things, we can use all these figures to calculate, to compute our various ratios to be able to know. I did my own analysis, but because I don't want to bore us too much with some of these analysis, I did analysis for all of them. You can see, I was trying to show some of these calculations, but later I discovered that I will just be boring my audience. But with the formula that I gave to us there, you can go home, take those 3 financial statements. You can just download it. Go to their website. Download it on your home. Take it as a assignment or as own work. Download it on your home. Start to play with some of those figures, and you start to see some of the results. See, like this Nigeria Brewery, for the profitability, ROC, in 2018 is better than 2019. So gradually, the company is, is telling me something concerning the company. Return on capital employed. What I need to probe further? Does it mean that there's no more efficiency in the organization? What is the problem with the organization? But this one alone cannot give me the answer. I have to do other further analysis. And at the end of all my analysis, I cannot conclude whether I have to buy in the foreseeable future the stock or the share of Nigeria Brewery, or whether the one that I have already, I have to sell it quickly, or I have to hold on to it. All right? So this is just one of the calculations that I did on return on capital employed. I did the same thing for return on shareholders' fund. And this is the result that it gave to me too. Don't understand? But eventually, I just look at it that if I keep on doing the computation, I don't have all the whole time here. So I have to just give only the formula. But I have it on my own laptop because I have to do it. You can do this thing very easily if you know how to use Excel. With Excel, you can do it very, very easily, all this computation. So apart from that, we have return on assets. How are we employing our assets? And what is the return on them? The asset that have been employed, what is the return on it? I did the calculation also for this one too. Then, what about profit to straight ratios? There are many of them. We have profit all over sales, times 100%. What is the proportion of our profit on our sales or on our income? Not only that, we have cost of sales all over sales too. What is the percentage? Our administrative cost, what is the percentage all over sales? Our selling and brewery, you see, they separate their selling and distribution expenses so that you can highlight it because it's one of the major items in their income statement. If you go through their income statement, they highlighted it because it's one of their major items. That's selling and distribution cost. So all over sales, what is